I had a meeting with an investor this week, and they asked me a really interesting question, which was, who do you think is going to be the biggest US lender in the future? So I kind of thought, well, maybe it's going to be the usual suspects, countries, big institutions, mutual funds. But then they said, well, what about cryptocurrencies? To be honest, caught me totally off guard. But when you look into it, there are actually two cryptocurrency companies that combined account for wait for it, 200 billion dollars worth of American government bonds. So just to put that into context, if they were a sovereign state, they would rank about the 15th largest foreign holder of US debt in the world. So pretty big. Okay, Dean, you're in the hot seat. Let's start at the beginning. What are these cryptocurrency companies issuing?
Thanks, Tom. I think most people have heard of cryptocurrencies like Bitcoin and the like, but what we're talking about today is slightly different. It's called stablecoin. Effectively, it's a digital token designed to be worth exactly $1 and remain as such forever. So it's not the wild, volatile ride that you can get with cryptocurrencies themselves.
So we're kind of familiar like the regular sort of cryptocurrencies. How are these different? How do they work?
They're designed to be pretty simple, actually. So if you give one of the cryptocurrency companies like Tether or Circle $1, they will mint one USDT token and send it to your crypto wallet. In turn, they'll take your dollar and put it into a US Treasury bill, which is effectively a short-term loan to the US government, which will pay Tether interest. And then when you want your dollar back, you return your USDT token. Tether will burn it, sell the Treasury bill, and give you your dollar back.
Okay, so thinking about those three different people involved, the US Treasury, they get more money lent to them. So that's a big thumbs up from them. Tether, the cryptocurrency company, they earn money from the interest paid from the US debt. So big thumbs up for them too. But I'm struggling to see what's the benefit for the actual person buying the token? What's in it for them?
Sure. Well, imagine you live in a country that's got an unpredictable currency, where in places like Argentina, Turkey, Venezuela, you've seen devaluations from anything from 10 to 40% in a year alone. So your savings in real terms can evaporate pretty quickly. By contrast, a digital token such as a stablecoin allows an individual to effectively own a US dollar without needing a US bank account, without crossing a border, and basically without needing any permission. Now, Tether says it has more than 500 million users worldwide, which is an incredible statistic. And most of those people aren't crypto traders. They're just people in countries that have unpredictable currencies who have figured out that a stablecoin in their crypto wallet is possibly more reliable than the domestic cash in their pocket.
Interesting. Loads, so quite a big market then. Not as niche as maybe you might think. But how does the US government feel about people doing this in all the countries around the world and how they kind of accessing dollar exposure? Are they happy about it? Are they sort of worried about it?
At present, they talk about it pretty positively, actually. So Treasury Secretary Scott Bessent has been pretty openly enthusiastic about what stablecoins are doing for the US government's funding picture. But they have also been putting some regulation around it to prevent stablecoins becoming the next Wild West of financing. So in July 2025, it was passed into law something called the Guiding and Establishing National Innovation for US Stablecoins Act, which, if you acronymize it, is the Genius Act. So well done, America, for that. This put measures into place to make sure that every stablecoin must be backed one-to-one by cash or short-term US Treasury debt. So no risky lending, no other currencies. And the companies have to make their holdings, so the positions behind that, public to make sure that there's transparency. So it's quite easy to Google the amount of US debt and that Tether and Circle hold, for example.
That all sounds great, Dean, but there's got to be the risks. What are the risks? Tell me.
I'm glad you're scratching away at the surface there, Tom, to find the vulnerabilities. There's definitely a few to think of. So there's a relatively small number of private companies who are offering stable coins, and effectively no central bank lender of last resort who would step in if things go south. So think about the Bank of England and the Financial Services Compensation Scheme if your UK bank goes to the wall. In true Tether kind of crypto style, Tether is a private company. It's headquartered in El Salvador, and it's run by a 40-year-old Italian named Paolo Arduino. They've got about 100 employees and a product that didn't exist 15 years ago. So this is a pretty far cry from a big regulated US bank. It can also affect borrowing costs for the US. So far, that's been positive, i.e., the demand for stablecoins has helped modestly bring down yields for US short-term debt, according to some research for the ECB. But it could just as easily go into reverse if there's a liquidation of stablecoins.
Okay, we're on the final question, the title question, the question I was asked, which is, do you think cryptocurrency are going to be America's biggest lender in the future?
Perhaps not, but you could certainly see it becoming more important. So companies like Tether and Circle are already pretty large multi-billion-dollar buyers of US debt, and they're growing. And it's not unreasonable to think that large banks and other financial institutions will start to participate in this market to try and stay relevant in a digital world. So stablecoins are probably here to stay.
Super interesting, Dean. Thanks so much for your time today. For me personally, one of the most interesting topics this year. I hope you do find that's the case as well. And of course, thank you for watching, listening, and dialing in however you did it. And we'll be back again next week with another topic. That's Course Out Right.
Thanks, Tom.